All right, what the heck just happened to the stock of Cracker Barrel? I've been following this folksy off-highway restaurant / retail chain for a little over a year, and I started pounding the table on the stock last July after speaking to CEO Julie Masino, whom I think is orchestrating just one heck of a turnaround. Initially, the stock had a fantastic run, climbing from the mid-30s last September to the mid-60s by the end of January. Of course, once Wall Street started worrying about the impending tariffs and the possibility of a recession, the stock rolled over, especially after Liberation Day. At its April lows, it came all the way back down to 33 bucks. Now, I told you that was an incredible buying opportunity. Buy! I hope you took my advice, because Cracker Barrel is now up 38% since I last recommended it in April, climbing back to the mid-50s even after it got hit today. So this has been a big winner for us. But this morning, Cracker Barrel reported, and Wall Street clearly didn't like what it saw. And that's why the stock tumbled over 7% today. I think it was a solid quarter, and the market's overreacting because Cracker Barrel's run so much over the past couple of months. Well, let me tell you why. First, the numbers. Technically, Cracker Barrel reported what I guess people would think is a mixed quarter with weaker than expected revenue, basically inline same-store sales on the restaurant side, weaker same-store sales on that retail side up front. But in terms of profitability, Cracker Barrel's doing great. They earned 58 cents per share. Wall Street was only looking for 21 cents. That's what I call a colossal beat. Management also adjusted its full-year forecast for the fiscal year that ends in July. They maintained their revenue guidance, and they slightly raised their EBITDA outlook, in part because they're expecting lower commodity inflation and lower wage inflation. On the conference call, Julie Masino said right at the top that the quarter started soft. So her team adjusted quickly, taking actions, quote, to support the top line and tightly manage our expenses without limiting our ability to deliver our important fourth quarter initiatives, end quote. That's what's reflected in the numbers. Cracker Barrel's revenue and same-store sales were a bit squishy. But after the company recognized that and clamped down on expenses, it was still able to deliver a blowout earnings number. And that's what good companies do. See, they don't just hope things get better. They adjust to the current scenario to ensure that they can deliver strong results no matter what. As Cracker Barrel's CFO said later on in the call, while traffic started soft in February, the company, quote, saw improving trends in March and into April, which also benefited from a strong Easter, end quote. Easter, some of these holidays mean a great deal for this company. So the cadence of the quarter was encouraging. They also gave us plenty of detail on the key strategic initiatives. On the menu innovation front, management discussed a spring promotion with a couple of shrimp dishes, as well as an expansion of their pancake platform. Looking forward, Cracker Barrel's bringing back campfire meals this summer for the first time since 2018, and we all love those. Management's very excited about it. Management's also spent some time highlighting their extensive brand development work. Cracker Barrel has this key partnership with NASCAR. In fact, the Cracker Barrel 400 was held just this past weekend in Nashville. Hey, by the way, big win for Ryan Blaney, by the way. First of the season. But that's just the start of a larger partnership with NASCAR. I like it. These guys clearly know their core customer. What else? The company's having big success with its loyalty program. Now, they have this goal. I don't know if you remember when Julie was on. They had this goal of hitting 8 million members by the end of the year. You know that they've already reached that number with a full quarter to go? 1/3 of track sales are now associated with loyalty members. Always a good way to keep people coming back. Looking forward, Cracker Barrel wants to enhance the personalization of the rewards program, including through the use of AI. And they've even seen some encouraging results from early tests of the technology. This company's so smart. At the same time, management's trying to improve their in-store operations, both to boost quality and efficiency and to make life easier for its employees, something Masino and her team take very seriously. You got to do that. Having owned some restaurants, let me tell you, it's probably your most important thing to do. In the quarter, Cracker Barrel implemented phase 1 of its back-of-house optimization initiative, and Masino said they're, quote, pleased with the results, and employee feedback has also been very positive as team members find the new processes easier to execute, end quote. Now, ever since she started trying to turn the business around, Cracker Barrel's taken a careful approach to renovating the store. She talked about that here, too. These remodels cost a ton of money, and they want to make sure they're spending it on something that actually brings in more business. But when asked about this during the Q&A section of the call, management said they're still in the testing and learning phase for store remodels. Apparently, we'll get more concrete plans in September. Of course, not everything's going to go great for Cracker Barrel. There's this reason the stock really got punched today. As you can see from the same-store sales numbers, the retail part of their stores is flattering a bit. Plus, Cracker Barrel will definitely feel the impact of the president's tariffs on the retail side of the business. Management disclosed that roughly one-third of its retail products are sourced directly from China and said that it had additional indirect exposure to tariffs via products from domestic vendors that also source from China. Oh, that's going to hurt. Cracker Barrel said they plan to mitigate the impact of tariffs through a combination of aggressively negotiating with vendors, finding alternative sources, and possibly raising prices. But they still expect a $5 million tariff hit in the current quarter. Not ideal, though keep in mind that the $5 million hit was baked into the raised full-year EBITDA forecast. Frankly, I never cared much about the retail side of the business, which accounts for only 20% of the company's sales. But I can't ignore it, as any company that has gotten hit by tariffs bears a sort of scarlet letter going forward. We also know that Cracker Barrel has some separate improvement initiatives for the retail side, things like reducing the number of individual products that they carry and getting more thoughtful about the strategy for seasonal items, as Cracker Barrel used to set up their Halloween or Christmas merchandise needlessly early. Interestingly, management described the tariff situation as an opportunity to accelerate the things that it was already planning to do, breathe new life into the retail business. I've been there during Halloween season. It is a blast. Maybe it started too soon. I don't know. I loved it. All things considered, I think this was another really solid quarter from Cracker Barrel, especially because, like many other restaurants, the quarter started with a slow February. Weather was bad around most of the country. While the stock gave back some of its recent gains today in response to the quarter, likely reacting to the softer sales numbers or perhaps the tariffs commentary, you know what? I'm not sweating it at all. With today's 7% slide, in fact, Cracker Barrel's going back to where it was trading less than 4 weeks ago. Here's the bottom line. When you see Cracker Barrel coming down like this, you know what I think? I think it's a buying opportunity. This is a true turnaround story with a great CEO, one that I think will produce terrific results going forward. And even though the quarter wasn't perfect, the turnaround, it's very much intact. Man Bunny's back after the break.
Coming up, Cramer takes your calls. And the sky's the limit. It's a fast-fire lightning round. Next.